All right, guys, happy Monday. It's dark outside where I'm physically located in California. I'm here for a one-day quick little coaching group conference. So it feels weird doing this at 7 o'clock in the morning. So do you guys prefer when you travel for work? Do you guys like going east or west, or does anyone ever think of that? Is it easier to go east or west? I always think it's way easier to go west because you can work for a couple hours like before whatever conference that you're attending. Seems like you don't miss the full day. Um so we gotta vote for west. There we go. Awesome. Yep, so we're on the same page
East
there.
is horrible. Your meetings start at 4 o'clock in the morning. Your
Yeah,
7 o'clock meetings start at 4 o'clock in the morning, and
busy.
you're not going to bed at 7 o'clock at night.
Exactly. All right, guys. Well, happy Monday. I am going to share my screen and we're going to dive right in today. There's just a little bit of news in the world in case you hadn't paid attention. Um, so we've got a couple things to talk about. All right. So, okay. So right now, I'm on Google. Okay. And if you can see my screen here, I Googled oil prices. Okay. Does anybody know what you're looking at right here? Anybody know what this is?
Price of crude oil.
Okay. Price of crude oil. That's partially correct, Jimmy. Okay. Anybody else know what you're looking at here? Okay.
Is it the per barrel price?
It is. What we're looking at, guys, is just a bunch of noise. That's all it is. We're just looking at noise. Okay. So, um, yes, this is the price of crude oil and it's going up and down. And we'll talk about that, the details of it. But um, what's going on in the world as it pertains to real estate is just noise. Okay. So, was anybody in the real estate business around September 11th? Okay. Any veterans here? I'm sure we have a few. Okay. Todd, were you? Stroth?
Yeah, I was.
Okay.
That was my first or second year in the business. No.
So,
Yeah, it was.
early on.
Yeah, I'm
So,
trying to remember. It's been so damn long.
did the real estate market, guys, did the real estate market crash after September 11th? Does anybody remember like what happened to home prices?
It got scary for a minute and then it went up.
Okay, that's actually the exact like same answer I would say too. Like got scary for a minute, right? Um, and then ultimately like interest rates came down and then kind of the market boomed, right? Um, okay, what about like the Iraq War in 2003? Does anybody remember what happened to the real estate market after 2003? Okay, okay, pretty much the same answer. Scary for a minute, and then it kind of trudged along. So if there's one time in the last 25 years that it was bad to buy a house, like the market really was impacted, when was that? That was around the financial crisis, right? It had nothing to do with oil. It had nothing to do with wars or terrorism or, geopolitical conflicts. It was just a real estate bubble that was caused by, multitude of factors. And so if we look over the past 25, 30, heck, you could go back 50 or more years. Um, are there times where like geopolitical conflicts or wars cause the real estate market to crash? There's really not, right? The only time the real estate market crashed had nothing to do with oil or inflation or war or terrorism or geopolitical conflicts. That said, every time, oh, I got really bad echo in there. Every time we went through something like that, and it's been every couple years, probably for the last 20, there's been some type of, um, situation there. It was scary at first. So I had a client who has been pre-approved for maybe a year and just affordability just wasn't right. Like now's the perfect time, right? We kind of got our pre-approval updated about 10 days or so ago, found a house she likes, was like making an offer over the weekend. This is like a week and a half ago, on Sunday when the first missiles and kind of the attack of Iran started. Okay, and so what did she do? Immediately kind of pulled back, like, "Oh, I'm waiting to see what happens." And I think that's a mistake because this person had been waiting for a year to find the right house. It finally came up and decided not to. And to me, that's probably a buyer that still was maybe a little bit unsure. But it got me thinking, like, how many customers, and some of you have had a similar experience. Like, does anybody? Hey, Louis, can you? Never mind, got you. If you guys are unmuted, double check your phone. I'm getting some background noise. If you guys can, um, has anyone had a client in the last 10 days that has pumped the brakes or paused their home search because of what's happening overseas? Has anybody else run into that? Okay, Ashford had one, Duba had one. I see a couple hands going up. And so I think we probably all have had someone, right? And Todd's answer, I think, was perfect around September 11th, which was way more disrupting to us in America than what's going on right now, which was scary for a bit, and then the market kind of settled down. And I think the message we need to convey to our customers is basically that. And so I shared this page and said, "What is this?" And I said, "It's noise," because that's really what it is when it pertains to real estate. Like, certainly the price of oil going from 65 to 100 is going to increase gas prices. There's some inflation fears. If you have family that's military, certainly there's reasons to be concerned. But is the reason to be concerned related to real estate? Not really, right? This is a short term scary. It's not going to affect real estate really long term. Um, and I think that's important. So um, the customer that called me, and I think it's important to kind of look internally, like, what could you have done differently? If I had proactively called that customer that week and had said, "Hey, I know you're making an offer. There's some stuff going on overseas. Here's what I think's going to happen." I could have probably educated her a little bit on what to expect and how this conflict could affect inflation, interest rates, home prices, real estate market, so on and so forth. Um, but I didn't do that because it was a Sunday. She made her opinion, and when a customer makes their opinion, it's hard to change it, right? And so I think what we should all be doing right now is proactively reaching out to our sellers, our active buyers, our past client database, our sphere, videos on social media. We did one last week, like, how does the war in Iran affect interest rates? What should you watch for? I think we need to really proactively communicate what this means, because if they're not getting it from us, where are they getting it from? They're getting it from right here. And you just scroll through the news feed, and it's fear and concern and cause for panic, right? Um, and so I think all of us should take some time to get educated and explain to our customers what's actually happening. Okay, and so that's kind of what I want to do today. So um, if you followed these calls with us for a while, you know that this feed on Twitter, X, Kobe SE Letter, I'm a big fan of. Probably the thing I follow the most. And I'm in California at a conference, and we were at dinner last night. And so I was scrolling through my feed on X because I get alerts when they post. And this is how crazy and volatile things are. Okay. So this is 9 hours ago. So this is like, midnight. So overnight, oil futures open up, outside of US business hours because it's a global market. And, here's the first post. This is earlier in the day. Oil futures right now at 9:48 Eastern, oil was up to $113 a barrel, basically a 50% increase since a few months ago. 68% increase this month. This was a chart I saw. And so I was like saving some of these to share with you guys. And then the more I watched, the more I realized I don't need to share the chart. We're just going to go to the X feed. So let's just look at this in real time. Like $113 a barrel, that was overnight. Here's another chart. And then overnight, um, oil started coming down. And there's talk that, so the G7 countries are talking about releasing some of their strategic petroleum reserves, 400 million barrels, to bring some supply to the market that's not getting out of the Middle East right now. And as soon as that happened, look at oil prices. It went down. And the price of crude went down $15 a barrel, to 104. And then it looks like it kind of went down a little bit. It was up 30%, overnight. And, now it's up under $100 a barrel. And, 99.50 here. Anyway, the point being is that, this is all noise. Oil is $99 a barrel, right now in real time. Is anybody on this call an oil trader? Like anybody on this call, like dealing petroleum futures? Like if you guys like the show Landman, great show. Like, are any of us Tommy from Landman, like trying to sell, oil? No, none of us are, right? And so this is all noise. And so if oil is up 10% or down 10% today, does it have a direct impact on us right now? No. On the real estate market right now? No. But is it important for us to be aware of because it could have some impacts on interest rates and inflation over the next 30, 60, 90 days? Absolutely yes, right? But we've got to get out of like the every bit of news is cause for a reaction. And I think that's what a lot of our customers are doing right now. So I pulled this up, and it's good to watch this just to kind of be able to have intelligent conversations with your customers. Now, so here's what I think is going to happen. Okay, so oil has gone up and it's come off the peak. I think the move of releasing 400 million barrels around the world was smart. That brings supply into the market. That should bring prices down. But will oil going up have a direct impact on what we pay at the tank over the next 30, 60 days? Absolutely. There's no way that we're going to avoid that. Okay. So let's talk about that. Okay. Um, so I'm in California. Oil's like, or gas is like crazy, or it's like 4.75 a gallon. Let's say, okay, that gas goes up $2 a gallon. Okay. Um, and let's say you fill up once a week. Okay. And let's say you drive a car that has a 20-gallon tank. Okay. So I'm filling up once a week with 20 gallons. Okay. If gas goes up $2 a gallon, which in most of the country would be like almost doubling right now. Okay. How much did that increase the cost of me filling my car up? Okay. $40, right? Okay. Let's say this lasts for 4 weeks and there's a 4-week surge in oil prices. That would potentially cost someone in the extreme increase in gas, $2 a gallon, driving a car that's got 20-gallon tank, filling up every single week. It costs $160 a month. Okay. If it takes 2 months to get back to normal, okay, that's $240. If it takes 3 months to get back to normal, it's $360. Is $120 to $360 enough to change someone's mind about buying a house? Probably not, right? And if $120 to $360 of expenses over a 30 to 90-day period of time is going to cause someone not to buy a house, they probably weren't a home buyer to begin with. Like they probably weren't a committed home buyer to begin with. And so I think it's important to put what's the cost of gas, like what's the big picture increase as far as at the tank. Um, there's other talk of potential inflation increases. So we get PCE this week. That's the Fed's favorite measure of inflation. That's going to be the February meeting. Pre-Iran conflict should come in really tame. Would be a good market move. But there's projections, and I've seen people projecting CPI, Consumer Price Index, going up. It's in the mid twos now, going up into the mid threes. So a 1% increase in inflation if these gas prices or oil prices don't come back down. Certainly that'll have an impact on the market. But do you think that producers of goods or suppliers of goods, do you think they're going to pass all of those costs onto the end consumer? So let's say Walmart, for example, okay? If inflation goes up because of the price of oil increasing and it costs Walmart more money to ship goods and services into their stores, are they going to pass dollar for dollar those cost increases onto the consumers at Walmart, or are they going to let some of that eat into their profit? What do you guys think will happen? Okay. I think it's probably going to be a little bit of each. If you remember the tariffs last year, there was lots of fear of inflation increasing and suppliers passing along the cost of goods and services to consumers. And they really didn't because they know the American consumer doesn't want to pay it and can't afford it. And so I think the increased cost of oil is probably going to hurt companies like publicly traded international firms like Walmart in the short term more than it's going to hurt, Mr. and Mrs. Everyday American. And so I think it's important for us to have those conversations with our customers that is oil going up? Yes. Is gas going up? Yes. Could the cost of some goods and services go up? Yes. I think it's all going to be very relative and very limited. and hopefully over a short duration. And kind of like what Todd said at the beginning of the call when we talked about September 11th, scary in the short term, back to normal within, and back to normal after September 11th was different from like many things, but real estate wise, probably back to normal within 60 days. And um, so I think that's kind of what we're headed. If we look at the bond market, and I'll pull this up again and share my screen. So, how are interest rates reacting to higher energy prices? They're reacting like you would expect. Interest rates are going up. So if we pull the chart up here, so here's where the bond market is today, which is about where we were at the end of January, where we were in December. And interest rates, if I go back 6 months, bond prices are actually higher today than they were in the fall, September, October, November, December. So in the fourth quarter, interest rates were higher. Okay. In January, rates were a little bit higher. Okay. We really only saw rates improve here like in February and in the first couple of days of March before the conflict last weekend. So are interest rates higher as a result of inflation fears on higher oil? Certainly they are. Are they 7%? Are they 6.5%? They're really not even kind of 6.25%. We're a little bit higher than we were 2 or 3 weeks ago. And so I think that's important to keep it in perspective as well. Um, the last thing I wanted to share is like, how will this impact the Fed? So these charts and graphs that we share here are, will be things we want to monitor. We do have a Fed meeting next Wednesday. 97% chance no Fed rate cut. In April, it's kind of more in the same 85% chance of no Fed rate cut. And really even in June, 62% chance there's no Fed rate cuts by then. So we haven't been projecting the Fed to cut really for quite some time. Most people didn't think you'd see a Fed cut until summer when there's a new Fed chair at the earliest. None of this really changes it. And so I guess the message for today is um, short term increase in oil prices, increase in interest rates, slight decrease in affordability, absolutely on the table. Long term, we're probably back to normal before people realize it. But I think it's important that we get the message out and communicate that to our customers. Don't let them read through the noise and form their own opinion, because the opinion they may form may be incorrect because so much of the news that they're going to read online is going to be slanted. Um, Okay. Aaron, you had a comment here. Let's see here. You want to tell me what you're saying here, Aaron? I'm not.
Yeah, last year we had really good economic news, but then the tariff announcement really
Yeah.
kind of hit us in the gut. And now this year it's the Iran conflict. So rates were gonna trade in this range long term, as far as there's always gonna be something happening in the market that kind of rumor mill, world event that's gonna keep us kind of trading in this range.
Yeah, I think what you said, Aaron, is there's always going to be something. I think that's like
Always.
could not be more accurate, right? Like there's always going to be something to point to. Um, and Sharon wrote something which I liked, which is like we have to be the voice of calm. And I completely agree with that. I think whether that's during transactions or just during the market, I think it's important that we're the voice of calm. And it can't be like we can't run around and be like the market's perfect, rates haven't gone up. No, rates have gone up. We have to be accurate and trustworthy. Um, but I think accurate and trustworthy in this market is like, hey, I see opportunity. If there's people that pull back and get on the sidelines because of fear, that means there's less competition. That means there's more deals to be had for someone to buy a house at a discount. And someone asked me to pull the chart back up, so I'm going to share this again real quick here. Um, and so just quick kind of walk through. So, is the bond market still on an upward trend? Yes. We are falling off of it a little bit, right? And so we need to, if we draw a line from like here to here, we need to see this upward trend continue. So we have to find some stability at some point where the bond market stops the sell-off like we saw here, where bond prices went down. We need to see a little bit of a stabilization. Kind of like you saw here in November and December, week or so period of time where rates sold off. we found some stability, and then the bond market started moving back higher, right? It happened again in January. It happened back here in the fall. And so this sell-off here, right, looks a lot like this one, and this one, and this one, and this one. All 4 times the market stabilized and then continued with bond market pricing moving higher, which means rates moving lower. And so that's what we got to watch this week. We do have a couple opportunities this week on the economic calendar for that to happen. So the Fed's favorite measure of inflation, the PCE, the personal consumption expenditure, gets released on Friday. We get CPI on Wednesday, so 2 big inflation readings this week. So positive news on that could be something that stabilizes us. Hopefully continued kind of news of like de-escalate, you guys know what I'm trying to say. Can't say it. De-escalation. Moving towards an end to the conflict will be positive. I think releasing these oil reserves is a positive, stabilize the market as well. So what we're looking for this week, guys, is just stability, right? We want to stabilize and kind of get back on that positive footing. But I think it's important that we kind of proactively have these conversations and communicate with our customers to kind of keep the fear out of their minds and give them accurate information on what's happening today, what happened the last 2 weeks, what we expect to happen over the coming weeks and months. Last thing I've got before we go, guys, if you're in Florida, there's a lot of talk of property taxes, and the state house passed some property tax relief. It's got to go to the Senate. It's got to go to Governor DeSantis. We're doing some classes on that later this month. So be on the lookout for some invitations if you're in Central Florida. If you're in other parts of the state, we'll talk about it on this call as well. But that's a really hot button topic to talk about as well. And if some property tax relief happens, even with higher interest rates and affordability getting that squeeze, property taxes may offset that. So I think that's something we should start in Florida communicating a little bit proactively as well. So with that, guys, have a great day. Have a great week. Watch the markets Wednesday, Friday morning, big inflation numbers, and we will see you guys next Monday. Thanks, everybody.